Hello and welcome to the FinTech Newscast. My name's John, and this week we'll be talking about some new developments in Insuretech from CB Insights. Morgan Stanley acquires ETrade, and Intuit buys Credit Karma. Please hit subscribe to keep up with these and the latest in FinTech news. All right, let's get going. With me this week is Steve.
Hey, John. How's it going?
Great. Just feeling a little bit of a
I hope you're wearing a face mask.
coronavirus going on. Since coronavirus is responsible for everything, I'm trying to avoid articles that say interest rates are low, mortgages are taking off, the Olympics are going to be affected, all because of and at the end of each article it says, due to the coronavirus.
Exactly, yeah. Even my commute actually is now decreased due to the coronavirus. I've taken the BART less frequently in the buses. I'm just working from home now. It's funny.
Chinatowns, actually in the U.S., this is not a rational reaction, by the way, but the Chinatowns are seeing less business in the U.S. due to the coronavirus.
Correct, yeah. And I had lunch with some friends at Visa yesterday at their headquarters here in SF, and they mentioned that they're all scared that the Tokyo Olympics may be canceled because that's actually a huge promotion period for Visa. So they have a thing where they're
like the big sponsor?
They're the big sponsor, and they promote Visa-only payments in the Olympic Village. So that could be a massive hit for fintech as well. So it affects basically across all of the economy. And on a more personal note, I'm also looking to refinance my mortgage. So take advantage of the super low interest rates.
Yeah, due to the coronavirus. Yeah, the interest rates are... we've kind of heard about a little bit of concern of negative interest rates in the U.S., and I thought, well, come on, that's probably not going to happen.
That's so European.
That's very Euro. Have your croissant and your negative interest rate.
Sure.
But now there's actually kind of a real worry. It sounds more realistic now.
It is, yeah. And even I think yesterday, the mayor of San Francisco, Mayor London Breed, declared the city a state of emergency as well to deal with the coronavirus. So it's just affecting everything nowadays. It's amazing.
Yeah. Well, there's definitely going to be some spin-off effects on these very low interest rates. I mean, as we know from prior cycles, when rates are too low, it kind of prompts or invites overinvestment and bubbles to form. Now, I think something will probably negatively happen as a result of that kind of unnatural low interest rates.
Right.
But I just don't know where that bubble will emerge this time. It's hard to tell.
If you knew, you'd be a much richer man.
Yes, yeah, for sure. It's always hard to do. You can place your bets out there.
Yep.
and see how it goes. But yeah, we're in this period of very, very low interest rates. As we said, Europe's had that for a while. Japan's had that, and now it's increasingly part of the permanent landscape in the U.S. as well.
It is.
So I'm just that's going to make life. That's going to change the environment and the investing landscape and the potential new fintech products as part of the economic world, financial world, from now on.
Unless you get acquired.
Yeah, we're already seeing some major acquisitions going on in the world of fintech, yeah?
We have indeed, yeah. There were two big ones in the past week or so. The first one was the Morgan Stanley acquisition for $13 billion of ETrade, that awesome mid-90s to mid-2000s.
The OG of the fintech world.
The OG of the fintech world.
They were like cutting edge at that time,
They
right?
were, yeah. I think they were also based in SF, right? Or at least Square Trade. Anyway, it's sort of the OG fintech space that really brought down brokerage fees and all that stuff. And Morgan Stanley acquired them, or planned to acquire them rather, for $13.1 billion last week.
So what does Morgan Stanley want to get out of this E-Trade relationship? It seems like Morgan Stanley is already a huge top GSIB kind of bank.
They're definitely a GSIB, a globally systemically important bank, for those of you not in the know. But they're also they cater to mainly very wealthy clients or institutions, right? Not to the common men like you and I. So by acquiring E-Trade, Morgan Stanley can now access the retail space. Everyone has a consumer product nowadays, and this gives Morgan Stanley a couple of really interesting points of leverage. The first one is that they are able to acquire $56 billion in deposits. That's the money that the traders had in their ETrade account.
Yep.
And the other is that Morgan Stanley is really good at lending money, but they're not really good at getting money from their clients. And this gives them access to that gigantic pool of money and do a lot of really interesting things in the
So
space.
they'll probably keep the ETrade name as kind of their version of Marcus, their
Sure.
retail footprint.
ETrade powered by Morgan Stanley, or the other way around.
And
Yeah,
if they open checking accounts, they'll probably do it the right way.
they probably will do it the right way, absolutely. And that's the plan. And it's funny because we've seen also a lot of consolidation in this space as well. Schwab acquired TD Ameritrade, another sort of Main Street consumer brokerage player. We've seen the effects that Robinhood has had on Schwab and Ameritrade and now ETrade. So it seems like this industry may be going away, or at least becoming maybe more concentrated in the next 3 to 5 years.
Yeah, ETrade avoided getting acquired for so long. It's kind of surprising to see them finally get eaten up by one of the bigger players. But it seems like the environment now is creating more pressure to build up, to scale up, to take on these new, increasingly well-financed fintech players. Yeah.
Yeah. And one other thing about this is really interesting is that by acquiring ETrade, Morgan Stanley can now also essentially increase their funnel for customer acquisitions. If you are an ETrade customer now, you may potentially at some point age into becoming a Morgan Stanley wealth management customer as well. So this is also one way in which they can increase they can optimize their customer acquisition and sort of transition those folks again from that discount brokerage fees.
It's hard to kind
the more
of
high
catch
fees.
you once you've already made the money, but if you're on the rails, they have you from the retail middle consumer kind of space.
The mass affluent to the wealthy,
once you scale up, you can continue with that same company.
which is I think a path that a lot of banks also follow. They go from the free checking account to the credit cards to the brokerage account, home mortgage, right, and then eventually wealth management services.
Is it
So-
becoming like the Spotify? We'll get a whole bunch of users, and then the ones that pay, we'll make all the money from them.
Is that the 80-20 rule or something like that? But it's basically most of your revenue comes from a small set of customers, right? So
Yeah.
this could be the case for MS as well.
So the other acquisition we saw was Intuit. What are they hoping to get out of Credit Karma?
Also really interesting. So I think that Intuit is becoming kind of a fintech juggernaut, right? So they have, of course, TurboTax and QuickBooks, and they also have Mint, which was really popular maybe 10 years ago or so. But now that they've acquired Credit Karma, they have access to a whole lot of financial data, which is pretty incredible. So apparently, Credit Karma claims that most of their users give them 2,600 data points.
How can they have that many data
Well,
points? One for each dollar?
Maybe no. I'm sure they may market maybe first and last, SSN, credit score, and all that kind of stuff. Address, right? That counts as one. But essentially, they're going to become the new data giants in fintech. So I think that's a good reason why they would acquire.
Does Intuit have a good history with their acquisitions? You mentioned Mint. Some companies,
They
they just
kind of-
buy things and then they end up dying.
They suffocate them.
They,
Yeah.
they don't know how to nurture or grow it out.
I think Walmart is known for doing this in the CPG space. They kind of acquire companies and then just smother them to death, right? They just never really take off.
They never self-actualize.
They never self-actualize. Right.
Yeah.
I don't know much about Intuit's acquisition history other than the fact that they kind of acquired Mint like 10 years ago or so. And Mint has been sort of floundering in the space.
Yeah.
It seems to be like in maintenance mode.
Because it seems like you just hear about, or the profits are pretty much all driven by TurboTax and QuickBooks.
Yeah.
And that was true 20 years ago.
Exactly. One really fun thing about this is that Credit Karma also has a free tax filing system, which will compete with TurboTax. And Intuit is actually well known for a lot of deceptive practices that maybe veer people away from the free product to the paid product. So we may see Credit Karma spin off tax filing product as well, so they can funnel people into the paid TurboTax product.
So what is Credit Karma's main way to get revenue?
So they essentially make money by affiliate fees. So they get no money from their customers. If you sign up online, you give them all your information.
Yeah, they advertise free. So
And it is free. They do give you quasi credit score for free, credit alerts, and all that kind of all this stuff. But then essentially their model is that if we know that John, you're in the market for a credit card and you go online because you trust Credit Karma because they have all your information, you can then go on there, select a credit card, and then once you go through the onboarding flow, they get a kickback from the seller. So if you get a Citibank credit card, Citi will pay Credit Karma some money.
So just all those affiliate links.
It's just
So
affiliate
that's
links,
worth $7 billion.
That's worth $7. It is if
for
you
the
have
relationships.
It is, yeah, especially if you have 2,600 data points per customer.
Huh.
Yeah.
I have black hair, by the way. It's valuable stuff to know.
Yeah.
Apparently. Yeah. Huh.
We should also highlight really the scale of Credit Karma. It is a massive company. They claim something in the order of maybe 100 million users or so, and they claim to own half of millennials. So half of millennials in the U.S. have
You
a Credit
belong
Karma.
to Credit Karma,
You belong
by
to
the
Credit
way,
Karma
if you're a
now, yeah.
millennial.
Well, you belong to Intuit now, but yes, they have a
so-
really big yeah.
You might see some bodies flying off the ship.
You might see that, yeah. So this is a good way for them to again get access to all that data, get people to maybe funnel them into the paid TurboTax stuff. And the third piece is that by doing this, they're also able to increase their customer acquisition funnel because they again have 100 million users in the U.S. who they can just easily funnel into some Intuit products.
It's all about the funneling.
It's all about the funnel. It's all about the data. I heard somewhere somebody referred to this buy here, this acquisition as Intuit is a new Facebook.
They wish.
Well, they have all the data,
The
right?
financial Facebook?
Yeah.
But yeah, we might hear that Facebook acquires Intuit for
For more than $7 billion.
more than 7 billion, something like that.
Yeah.
You know, I just saw the new CB Insights finance or fintech report, and yeah, it seems like we're in this period just right now of these large deals, of this kind of winner take all effect.
Yeah.
Like the proven, the non-WeWorks of the world who are proving themselves doing well are getting the big funding rounds, are getting acquired.
Although it's mostly acquisitions, not really IPOs, right? It seems like everyone's getting acquired.
Yeah, we don't see the
not going
IPOs.
public. Yeah.
Right.
Yeah.
It's the same with this venture money going into fintechs. We're seeing lots of the deals are much larger than before, and the early seed stage A kind of deals are not getting attracting as much money. You know, just the riskiness, obviously.
Yeah.
If you survive through, then you can attract more money,
Right.
and that's always true, but becoming more and more true. But one area that we don't cover very much on the FinTech newscast is something that they actually cover in this new report, this FinTech report, and that's Insuretech. Now,
Make it
insurance
sexy. Make it
isn't.
sexy.
Yep, that's right. Insurance isn't life insurance isn't exactly sexy, or health insurance is not something you want to think about if you're younger. Generation Z, that's the younger than millennial.
I think so. I don't
Yeah.
know.
Well, if you're in
I
your
think Z,
20s,
yeah.
probably everything's gonna.
You're
be fine for a
invincible, it's
while,
fine, and
Nothing's gonna happen. And people aren't forming families as young, so there's not that drive to protect, and with insurance products as there was before.
Yep.
But there are some fintechs out there that are focusing on this market and trying to make their case. They mention a few, and one or two that we've mentioned before. We've talked about Lemonade, that has home insurance products and things like that. I think they started off in New York, yeah?
I thought they were in Berkeley, but could be the case. It's some coastal company, some elite
I
coastal
might
company.
be getting it mixed up.
Yeah.
And these names are so funny, too. We have a Hippo, so digital home insurance provider. And of course, it's on mobile and
course it
adjustable risk and premiums,
Great design
all that
and all
sort of
that,
thing.
yeah.
Yep. There's a company called Next Insurance. That's the SMB, small to medium sized business market.
So they basically they provide insurance to SMB customers.
Yes. Yeah. SMB policies.
Interesting.
Yep. WeFox, and that's this is the jargony thing is a B to B to C platform.
Of course.
So it's the carriers to the agents to the insurers, all the way through. So a whole vertical on there. I like these names too. Lemonade, WeFox. I think in a not sexy area, you have to have a cool sounding name.
Oh,
right?
it's not
What's
better
my
than
insurance?
State Farm.
WeFox.
WeFox, yeah.
WeFox.
As opposed to the General or
The General.
or State
man.
Farm or something.
Yeah, you need Shaquille. On
Yes.
those. He's always on those commercials. Yeah.
Gotta get that money.
And Bright Health. So a tech-enabled consumer health plan. some Medicare Advantage, individual type of healthcare products.
Well, I don't think we'll need Bright when Sanders becomes president this year, right?
They
We'll
might
need
vie to be the preferred vendor,
Yeah,
right? You
there you
might
go.
be setting yourself up there.
Yeah.
And these are getting a little bit more money than they used to as well. So the funding has hit a 2-year high, and mainly by having some large rounds that went to the biggest players. And this is kind of an open market. Like we said, we don't talk about it because there's not a whole lot, there's not as much news, and it's very specialized. But there are companies that are, like we mentioned, that are going after this, and kind of in a new and different way. There's a company called Thimble that's focusing on this flexible short-term insurance for small businesses and freelancers. So kind of leaning into where the market's going. We've talked about before people needing more flexible products.
The gig workers, 1099, and all that kind of stuff.
Exactly, the 1099 the world, and those poor Uber drivers.
Yeah.
For you driving all day,
Who are employees
hopefully
now.
making more than minimum wage.
Yep.
In some states, right? In California, they're in.
I think in California, but I
they're
heard
going to be.
I think they're going to be. Yeah, I heard a stat recently that most Uber drivers make $7.41 an hour
After the car depreciation
after
and
all
everything.
this stuff. Yeah.
Yeah.
So
Yeah.
I think that's below the federal minimum wage. Yeah.
Yeah, even the federal minimum wage, which is $7.25 for a long time now.
It's been at least 15 years.
So if you can get some help, take it. Thimble is going into focusing on that market. There's a company called Huckleberry that is looking at personal care, auto repair, and restaurant businesses on the SMB side. So kind of focusing on a niche that seems to be underserved.
Yep.
And again, a cool name, Huckleberry.
It's a pretty awesome name.
Yeah.
Finn is next.
Yeah. And a lot of the driver is, or one of the challenges, I should say, are that millennials aren't getting insured as much as prior generations have. So individual life insurance policies have been declining in the United States in absolute terms, and of course, even with our slight population growth in the U.S., definitely as a percent.
I don't think I have a life insurance policy. Do I? I don't think I do.
You have one through work.
Oh, right.
For
yes.
sure.
But I haven't purchased one on my own, and I don't think I will either. Seems like a bad investment.
Yeah. Depending on your needs.
My life is not worth that much money.
Yeah. Well, I'm sure your family
Yeah, my family.
would want you to have a little bit. And I think life insurance was seen as this very base kind of financial responsibility thing to do before. You would lay
It strikes me
out
as a
and-
really like Mad Men type thing, like a very 1980s and 70s thing. I don't need life insurance.
Mad Men is in the 60s, but yes, I get your
yeah,
point.
yeah.
And it's not that critical thing where you lay out all your mortgage and all this stuff. And I used to sell. That was one of my first jobs after college. Is as a loan officer, I would sell insurance along with loans.
Wow,
That too, a long time ago, and with home savings.
that's pretty awesome.
My first job. Even in the old movies, you see, I have some value on my life insurance policy.
Right.
In
$1
It's a Wonderful
million.
Life.
Yeah.
He mentions how much on his whole life policy that he
Yeah,
has.
you mean from that 80-year-old movie? Absolutely, yes.
Yeah, right.
Extremely current, yeah. Yeah, it's just not a product that appeals to most consumers nowadays, and also I think that if you look at the numbers as well, it's just there's not a good ROI on that unless you take it on somebody else and then kill them, which is, I
Maybe
think, is illegal.
80 years ago, there's more likelihood you could end up homeless. You end up, in penury, and now that's less likely. Or with both spouses working,
Yep.
your spouse has a career. It's not like you're leaving
there's no
somebody
fallback.
that's a homemaker that has no career prospects.
Yeah.
And maybe that's part of the drive. Maybe you still need life insurance, but not nearly as much as when the other person still has an income.
That's right.
Yeah. So yeah, that's driving down this life insurance gap, or driving up this life insurance gap that we're seeing.
So to rehash like a kind of a really old trope here, sounds like the insurance companies may need insurance because the millennials are killing them.
Oh man, yeah. Or they just have to get into 21st century with WeFox, or
Sure, yeah.
a mobile gamified kind of a thing going on. Well, at least with health insurance, obviously you need that if because you can't. It's not something you can predict. You're going to need something to back you up. So there's more money going into these, which is kind of a good sign because there's people looking at more creative ways to provide insurance and show the need in some cases where it makes sense. Yeah, and just like the other parts of fintech, there's some companies that are working on the back end, kind of like we've seen with banking as a service.
Yep.
So there's a company called Duck Creek Technologies that does the policy, billing, distribution, all of that. So you can get your Insuretech company up and running quickly. And there's one called Uncork.
It's an amazing name.
UNQORK.
Of course.
Cloud hosted platform, drag and drop interface, bed up development, unified workflows.
So many buzzwords. So much garbage language.
Yeah, right. So it's a no code software as a service platform for insurers and existing insurance incumbents as well.
Right.
So they can build their applications on top of Uncork's platform. So kind of like a mirror market of what we see in banking, but for the insurance side as well. So pretty interesting stuff out there for insurance, and we'll try to talk about it more when we see.
Yeah, we should do
New
maybe a
developments.
deep dive. We should do a deep dive on insurance tech and also RegTech, which is also very interesting.
RegTech, yeah, I think it's interesting because the AI aspect, a lot
Sure.
of the interesting how compliance is definitely such a burden.
Automate stuff, absolutely.
Yeah. So there's more to fintech than checking accounts.
Yes.
All right, now it's time for our final bite, where we take a look at one number and the huge, interesting story behind it.
My number is actually quite interesting. It is $56 million.
Wow, that is an interesting number.
It's nice and rounded. Sure, it makes sense.
Yeah.
So there was this Irish criminal.
He walks into a bar.
He works into with a couple priests and a rabbi. No, there's this guy, a drug dealer named Clifton Collins, who again was selling mostly weed, I think, in Ireland, and he, very smartly put away a lot of his money into Bitcoin, maybe like 10 years ago or so.
Wow.
Yes.
Okay.
So he put his money into Bitcoin, continuing on his his dealings as a drug dealer, and hid all the crypto keys all throughout his house, including in a fishing rod. Right. So he actually
fishing
wrote
rod.
down the key, put it in a fishing rod, and forgot about it. Well,
That's called cold storage, cold fish
cold storage. Yes. I'm sure this guy is not that smart to have that term. But what he did is that he hid away his money with physical written keys for his Bitcoin wallets and stuff. And one of them, the biggest one, ended up in his fishing rod. Of course, Q forward a couple of years later, Bitcoin value has exploded significantly. But he also got nicked. He went to jail for drug dealing, right? So what happens? His landlord kicked him out of the house and threw away all his possessions, including...
Oh, man.
Yes.
One of these stories.
Including the fishing rod, which they could not trace back and is not in some dumpster in Ireland. But somewhere out there, there's a key and a fishing rod for $56 million.
The question is, how many Irishmen are digging through garbage dumps right now?
I'm sure it's a really funny number as well. But yeah. But they say here that he basically bought Bitcoin at between $3 and $13, and he bought 6,000 of them.
Wow.
Yes.
Yeah, that's a lot.
And then stashed it away across his house. Landlord threw it all away, and boom, now he's out. A
So
very big fortune.
The point of this story is crime doesn't pay.
Unless you have a different cold storage system.
No, it just doesn't work out
just
for
doesn't
you.
pay.
Yeah, it doesn't pay.
Yeah,
Actually, the ones that do pay, we just don't hear about it.
exactly. It's paid
It's
under,
a Kaiser
under the
Soze
table.
style.
Yes.
Well, my final bite is $5.5 billion.
That's a much bigger number.
So yeah, a different kind of crime maybe pays. Financial crime
Yeah.
is a better bet actually, and that's the amount that Revolut is valued at after their latest Series D funding round of $500 million.
That's a nice chunk of change.
Yeah, that's the most they've ever raised. They've only raised $836 million altogether, and most of it was just recently. And it's interesting. This article brings up a lot of good points that Revolut is accumulating. They're doing very well, mostly in Europe and the UK, but they're also in Singapore and they're in beta in Australia.
So how is a bank that operates in a handful of countries and is basically offering a product that can be replicated by other players? How is this so valuable? What makes them so interesting?
Well, yeah, they're expanding. So they've announced that they're focusing on launching in the US and Japan. So I'm sure some of that money is going to go into the regulatory, all the regulatory and the Japanese translating.
And buying buses for ads and all that stuff, yeah?
Yeah, but of course, it's the growth that venture capital investors are focusing on. And their users have grown by 169% last year.
Whoa.
Their daily active customers, which is arguably much more important, grew by 380%.
Wait, 380%? That's actually quite impressive.
So 3.8 times in 1 year.
Wow.
Their revenue grew by 354% back in 2018. We'll find out the new number soon. So it's that huge growth that investors want to jump into. And they're adding a lot of features into their products as well. I'm sure as part of expanding, and like we've been noticing in other fintechs, kind of like that rebundling of products so that they can keep all their new customers in their ecosystem with all the products that they would need.
So
right?
it's no longer just a checking and savings and a little card. Now it's money transfers, it's alerts, it's insurance maybe. It's a whole suite of services, right?
Right. They said that most of the money will go to improving their products for their existing users, as well as more revenue generating activities within Revolut as well.
Amazing.
So they have a lot of services that they're going to expand into and markets that they're going to expand into, and they have the growth to back it up. They have a good story. It's working, so let's put more money into that.
It's quite impressive.
So you might hear about Revolut here in the U.S. Sometime soon, sometime in 2020. They don't give a date, but sometime soon, N26, we'll have some competition over here.
I'm sure you'll see them in your Instagram feed for sure.
Yeah. A lot of social media marketing.
I think a lot of social media marketing, yeah. Buses and social media seems like, yeah.
Yeah, buses seem like
Buses, bus stops,
yeah,
and
an
Instagram.
odd way, but yeah. All right, that's it for this episode of the FinTech Newscast. We'll keep you up on the latest developments next week as well, and thank you for listening.
Stay safe out there, y'all.